This is supposed to be the beating heart of Britain's economy. Today, the City of London is a ghost city. And at its heart is the Bank of England, now contemplating a historic collapse in economic activity.
This is a very old institution, so I'm not going to speak for the whole length of the history of the Bank of England, but I think it is unique. Certainly it's unique in modern times. We've never seen anything like this.
The bank laid out a COVID-19 scenario which includes a 14% fall in economic output this year, the biggest annual contraction since 1706. Though the scenario would then see the economy rebound by 15% next year. That rebound prompting a raise of the eyebrows from economists with longish memories. If you remember back in the early days of the financial crisis, a lot of institutions, including the Bank of England, were predicting V-shaped recovery. So the economy goes down and then it goes up again in a year or so. And they were very wrong, as we all know, about that. And in a sense, the bank is doing something similar this time around, saying there's going to be a mighty fall potentially in the economy, but come the end of 2021, we'll be back to more or less where we started. But crucially, that entirely depends on the financial sector doing its bit.
The clear message from banks is that the best thing they can do, not just for the economy, that's important, but for themselves in terms of their own financial positions, is to keep lending.
And what if they don't?
Well, the very clear message from us is that the outcome will be worse. It will be worse for the economy and therefore it will be worse for the banks.
Why? Well, consider the plight of Valentina, a physio who simply couldn't keep afloat without the government's furlough scheme or loans from banks.
We have seen a 90% drop in our revenue. We're seeing ourselves building up more and more liabilities that we are seriously concerned that we are going to be struggling to meet and cover. So this is seen as we've been able to use schemes like the furlough scheme, and which has been an absolute lifeline. But a lot of us are having to go down the route of very difficult decisions in applying for quite significant loans.
And that's not helped by the fact that, even though the Bank of England has cut rates to just 0.1%, banks aren't all passing that on to customers. So will this governor do what Mark Carney ruled out and maybe even cut rates into negative territory?
I think previous people on the MPC and previous governors would say they didn't have in mind the scenario that we're in today. And I think it's wise not to rule anything off the table.
Unlikely as it is, it's striking that unprecedented remedies are on the table. And with the UK facing an unprecedented collapse in economic activity, with banks being asked to provide unprecedented support, who can rule anything out? Ed Conway, Sky News.